Okay, folks, unless it's a day trade, all trades begin with a look at the weekly charts. So you could see back in 2010 when Apple peaked out on the RSI, and it was at extreme overbought levels. And although the stock was able to rally 26%, the RSI never confirmed that uptrend. You had a blip up here back in early 2011, but really the trend was down. You had money that was rotating out, actually out of Apple. So although the stock price headed higher, it was being bid higher, algorithm, rapid fire trading, but institutional money was slowly but surely, and the operative word is slowly, rotating out of Apple. You can take a look here. Take a look at the volume bars. Ever since that peak, the volume bars to the downside were usually on above average volume, whereas you had up volume bars, which were, for the most part, below average. So you had the volume was very, very light to the upside. Downside volume was considerably higher. The only time that you saw volume bars rise was when you had short covering as Apple began to peak. And people tried to short it. Then they started getting burned, and that would drive the stock up higher. And just on short covering rallies. So you really can, unless you just have institutions out there thinking that they were shopping for a bargain. But let's face it, folks, the passing of Mr. Jobs is going to be devastating. So although on a PE basis, Apple is cheap, the problem is that the stock market is a forward-looking mechanism, and they may just begin to start discounting Apple. And it'll show up in the PE as being expensive, but one quarter, if they do miss, that PE multiple could just shoot up, and overnight it becomes expensive. Let's continue on the weekly chart. You can take a look at the money flow. It's consistent with the RSI. Money flow, actually this is the ultimate oscillator. Ultimate oscillator trending down. Money flow here. You can see all this money just piling into Apple. But over the course of time, money began to slow. You didn't have that huge surge of net buying. Overall, you had money that was still being put into Apple, which caused the price to head higher. But the momentum, the amount of money being put in was drying up dramatically, and it's reflected in the money flow index. MACD on a weekly basis. This is really it's not a leading indicator. It's just a confirmation indicator. MACD confirming now what we had expected, that the stock is in the correction. This choppy action here is always bad. This is the Stoke RSI. You never want to see this. When you see this choppy action, it's a sign of weakness. You do not want to be buying stocks with choppy action like this. So as it stands right now on a weekly basis, for now anyway, Apple still is short. Let's get to the daily chart. Daily chart on Apple Computer. Now, we first went short of Apple on the 31st. We covered here when it bounced off of its 50-day moving average, which is a natural support level. So we knew that Apple was not going to go straight down. If you think that Apple is just going to drop, you're sorely mistaken, and you're going to get burned. So you really, truly need to be careful. So we covered, we allowed Apple to rally. And by the way, what you're seeing here in this black line here is an overlay of the S&P 500 to see how it's performing. And for the most part, Apple's performing with the S&P 500. So you saw a rally, and then what we did is I sent out an alert to members that let's get short of Apple once again. And we shorted it, and we took half of the profits off the table on Friday afternoon, because we saw, for one reason, you have 380, which is a historic support level, or a previous resistance level, which is now support. So that's one. Two is that Friday, I normally call Friday short covering Fridays. A lot of shorts don't want to go into the weekend with short positions, so they play it safe. They cover their shorts. They'll reopen them on Monday morning. Now, let's take a look at the alerts I sent out to members. This is a typo here. I sent this out on the 31st, and this is when we shorted it. I said 305. It was actually 405. $405.93 we went short. We then covered that position on. We then covered that position on the on November 1st, and the message that I sent out to my subscribers was volume is light. It's too light for comfort and appears to have some support at the 50-day moving average. I keep it brief because I want people to be able to get to the charts, make a determination of what's good for them, either cover on what I was doing or stay short. And if they would have listened to my advice, they would have covered and they would have gotten out and they would have taken profits. So then again, we went short of Apple at a price of $395.35. And on the 11th, we took profits, half profits. This is much as sent out to my members. We've taken half profits in this trade, more this weekend. And again, I'm going to be going over our adding to Apple once again on the week ahead commentary, which will be sending out to members. Now that commentary goes into how the markets are performing. Where do I think the market's going to go? What positions we plan on adding and when. And I'll be doing another video sometime this weekend regarding Diamond DMND. We traded that last week, so we took profits. We're going to look to get back into Diamond Foods, but that'll be a separate post. So let's get to that intraday chart, which I mentioned, and I'll show you why we got out of that trade. Okay, what you're looking at here is this is my trading software. This is an intraday, a 15-minute chart of Apple Computer. And I use trend lines quite a bit. It's very, very important to me. And I use candlesticks, obviously. So long as on a Friday, when I have a profit in the trade, I tend to like to at least take some profits off the table so I don't go home and worry about the trade over the weekend. So here you have it. We were in a nice downtrend all day long. Then at 11:30, Apple broke out of this 15-minute downtrend line, or this pennant formation actually. And I wanted to see whether or not it was going to pull back, which it did, and would it put in a higher low on the day. And it did. So we took profits around here at the 382.85 level. And so we put about $12 a share in our pocket on this trade. Not a bad trade. So what you're probably going to see is a rally in Apple Computer, and we may look to short more Apple Computer into that rally. But again, I'll be sending out a trade alert to members when we do that. Don't take it as a foregone conclusion that we do that. I just might cover my Apple trade and get out of it altogether, take profits. And again, I will be sending out an alert to members. So if you want the Contrarian Trader, the week ahead commentary, please try the 14-day free trial offer. And that's it, folks. Have a great, great trading week. If you have any questions, shoot me an email, robert@thecontrariantrader.com. Thank you. Enjoy your weekend. Bye-bye.